AI is revolutionizing industries, transforming businesses, and creating massive investment opportunities. From healthcare to finance, AI is making processes more efficient and opening new avenues for growth. But instead of betting on a single company, a smarter approach is investing in AI ETFs, funds that give exposure to multiple AI-driven companies with high growth potential. These ETFs diversify your investment, reducing risk while maximizing potential returns. In this video, we'll break down the top 5 AI ETFs for 2025, ranked based on performance, holdings, and long-term potential. We'll explore their unique features, the companies they include, and why they stand out in the crowded AI investment space. Stick around to the end to discover which ETF has been delivering over 40% annual returns, one of the highest among AI funds. This could be a game changer for your investment portfolio. Before we dive in, make sure to like this video, subscribe to MoneyQuest Broker, and turn on notifications so you never miss valuable investment insights. Your support helps us bring you the latest and most effective investment strategies. Why AI ETFs? Think about this. In the 1990s, the internet boom turned everyday people into billionaires practically overnight. Companies like Amazon, Google, and eBay became global giants, and anyone who invested early saw their portfolios skyrocket. AI is shaping up to be the next big thing. Just as the internet redefined life and work, AI is transforming industries like healthcare, finance, manufacturing, and entertainment. Companies leading AI development such as NVIDIA, Microsoft, and Google are experiencing massive growth, and ETFs provide a way to invest in these companies while reducing risk. These tech giants are at the forefront of AI innovation, driving the technology forward and creating new opportunities for investors. Instead of picking individual stocks, AI ETFs spread investments across multiple AI-focused companies, providing diversification and stability. This means that even if one company underperforms, the overall investment remains balanced, reducing the potential for significant losses. This approach allows investors to benefit from the overall AI industry's success, rather than relying on the performance of just one company. Let's explore the top 5 AI ETFs for 2025, ranked from number 5 to number 1. These ETFs have been selected based on their performance, the companies they include, and their potential for future growth. Number 5. Amplify AI-Powered Equity ETF, AIEQ. AIEQ stands out because it's not just investing in AI, it's powered by AI. This ETF uses IBM Watson's machine learning algorithms to analyze market trends and select stocks dynamically. Key features: uses AI for stock selection, removing human biases, invests in major tech players like NVIDIA, Apple, Microsoft, and Amazon. Actively managed, adjusting holdings based on market conditions. Performance annual return 20.05%, expense ratio 0.75%, assets under management $136 million. This ETF is ideal for investors looking for a data-driven approach to AI investing, with AI itself making the decisions. Number 4. iShares Future AI and Tech ETF, ARTY. This ETF focuses on AI, robotics, and next-gen technologies. Unlike broad tech ETFs, ARTY prioritizes companies at the core of AI development, including chip makers and software firms. Key features: focuses on AI and robotics, including NVIDIA, Broadcom, and Arista Networks. Invests in under-the-radar AI infrastructure companies. Low expense ratio, keeping more returns in investors' pockets. Performance annual return 22.11%, expense ratio 0.47%. Assets under management, $850 million. With steady growth and a low expense ratio, ARTY is a solid choice for long-term AI investors. Number 3. Global X AI and Tech ETF, ticker symbol AIQ. AIQ provides exposure to AI at every level, including companies building AI technology and those integrating AI into their operations. Key features: 67% tech-focused with holdings in AI leaders like Google, Amazon, and NVIDIA. It invests in AI applications across industries, from finance to healthcare. This is a well-established fund with strong historical performance. Performance annual return 28.9%, expense ratio 0.68%, assets under management $2.6 billion. AIQ is a great choice for those looking to invest in both AI creators and AI adopters. Number 2. Roundhill Generative AI ETF, ticker symbol CHAT. This ETF is designed to capture the growth potential of the generative AI sector, which is rapidly transforming various industries. CHAT is one of the first ETFs dedicated to generative AI, focusing on companies leading advancements in AI-driven automation, content creation, and deep learning. Key features include a diversified portfolio of companies at the forefront of AI innovation. It is actively managed, adjusting holdings based on AI trends and market conditions to maximize returns. CHAT invests in generative AI leaders including OpenAI partners and cloud AI firms, ensuring exposure to cutting-edge technologies and innovations. It offers exposure to companies shaping the future of AI-driven industries. Performance metrics are impressive, reflecting the growth of the AI sector. Annual return, 36.5%, showcasing strong performance in a burgeoning market. Expense ratio, 0.75%, which is competitive for an actively managed ETF. Assets under management, $310 million, indicating strong investor confidence and substantial capital backing. With AI becoming more integrated into daily life from smart homes to AI assistants, CHAT offers high growth potential in the evolving AI landscape, making it an attractive option for forward-thinking investors. Number 1. ARK Autonomous Tech and Robotics ETF. Ticker symbol ARKQ. Topping the list is ARKQ, an aggressive AI ETF focusing on autonomous technology, robotics, and machine learning. Key features. It targets companies redefining automation and AI-driven industries. Actively managed by ARK Invest, led by Cathie Wood, ARKQ holds companies in autonomous vehicles, robotics, and AI-powered manufacturing. Performance annual return 41%, expense ratio 0.75%. Assets under management $1.2 billion. With one of the highest returns among AI ETFs, ARKQ is an ideal pick for investors looking for aggressive AI growth opportunities. AI ETFs offer an easy way to gain exposure to the rapidly expanding AI sector without the risk of picking individual stocks. Which AI ETF interests you the most? Let me know in the comments. And don't forget to like this video, subscribe to MoneyQuest Broker, and turn on notifications for more investing insights. See you in the next one.